It's Monday, August 29th. Today is Take Out the Trash Day as traders look to finish what they started during Friday's sell-off on the heels of Fed Chair Jay Powell's opening remarks at Jackson Hole. Even after the close Friday, stocks were still selling off in the aftermarket. I was here pretty late that night, and even at 8 p.m. when it all closes, stocks were still at the lows of the evening. So it isn't surprising there's still a lot of work to be done as traders have decided to reduce some of the exposure they put on in the last few weeks. Look, I get it. The talk was tough, and Jay took away the Fed pivot that so many investors have been hanging on to. He said the Fed's focus is to bring inflation back down to our 2% goal. Forget 2%. It's not going to happen. It's way too late for that. Welcome to the Money Runner. This is your Market Minute. I'm David Nelson. There's a lot of reasons why the Fed can't achieve a 2% target, but the biggest is the following. The gross federal debt of the United States is now at the highest level since World War II and better than 120% of GDP. Each tick higher makes it that much harder to service that debt. I'll be going over this in tonight's full-length podcast. I hope you can join us. Bottom line, the Fed needs a new mandate. Today, if you look at that chart, we're going to break through the channel that was established off the June lows. And right now, we look to open somewhere around the 50-day moving average, but the real support is a bit lower, closer to the 3,800 line in the S&P. Look, I'm still holding on to my call that the June lows will hold. We're going to need to see something we haven't seen yet to break those levels. Almost every week is filled with economic data, but this week will be even more important because given the change in sentiment, investors are going to be looking to overreact up or down. Top of the list, we have tomorrow's home price index, which should show the index to have risen slower in the year ending in June. And of course, on Friday, we get non-farm payrolls, which have been very strong. The Fed seems for now to be giving up hope in the idea of a soft landing. We're just coming out of recession right now. And as we've discussed on this pod, the U.S. is looking at 1.5% maybe for Q3 and Q4. This is an election year. Anything less than that, or if we go negative, will have an enormous impact on the November results. A quick shout out to Bloomberg's BNN unit out of Canada. I'll be on later this morning at 9 a.m. That's it for me today. Remember, I'll be back later tonight with a full-length pod on the Fed's new mandate. Subscribe at the end of this one and you'll get a notice as soon as it's up. Have a great day. I'm David Nelson.